All right, everyone, welcome back to Talk Tickers. Usually we're up to our ears in earnings calls, trying to make sense of balance sheets and all that jargon CEOs like to throw around.
Yeah, deciphering management speak, it's a skill unto itself.
It really is. But today we're taking a break from the usual routine. Some massive breaking news just dropped, and we can't ignore it. Constellation Energy, ticker symbol CEE. For those following along at home, they're making a huge EE move, acquiring Calpine.
A blockbuster deal, that's what they're calling it?
$26.6 billion, cash and stock, the whole shebang. Constellation's even taking on Calpine's debt. That's got to be a sign of confidence, right?
It certainly seems that way. Big statement for sure.
So for our listeners who maybe aren't as familiar with these two companies, could you give us a quick rundown? Who are these guys, and what does this merger actually mean, in the grand scheme of things?
Absolutely. So Constellation Energy, they're a major player in power generation, known for their nuclear power plants especially.
Right, the nuclear folks.
But they've also been branching out into renewables, wind, solar, that sort of thing. Calpine, on the other hand, they're a big name in natural gas. So put those two together and what do you get?
A behemoth, a true energy giant.
Exactly. They've got their hands in pretty much every major power source now. It's not just about size, though.
That's what I was thinking. It's like they're building this all-weather energy portfolio, ready for whatever the future throws at them.
Yeah, they're hedging their bets for sure. And the timing, well, that's interesting too, right? Makes you wonder, WHY now? What's driving this whole merger frenzy?
Well, energy transition, that's the buzzword these days, isn't it? Everyone's talking about ditching fossil fuels, going green, but it's not as easy as just flipping a switch.
Nope. It takes time, resources, infrastructure. You need companies with the muscle to actually manage that transition. And this merger, well, it creates a powerhouse that can do just that.
So they're positioning themselves as the leaders, the go-to for this whole energy transition thing. Smart move.
Definitely strategic. And then there's the whole U.S. energy market situation.
Wow.
Texas, for example.
Texas.
They're going through a huge energy boom. Population's growing like crazy. Industries are flocking there. Demand for power skyrocketing.
Right, Texas. Always got to be bigger and better.
And this deal, it gives Constellation a massive foothold in Texas. Perfect timing to capitalize on that growth.
So they're thinking long-term, playing chess, not checkers.
Exactly. But hey, there's another huge factor driving electricity demand that we haven't even touched on yet. AI.
Oh, right. All those data centers powering our favorite AI tools, they're energy hogs.
No kidding. They need a constant, reliable stream of electricity. And who's going to provide that?
Constellation. They're setting themselves up to be the go-to power provider for this whole AI revolution.
That's the play. So we're talking multiple levels here, right? Energy transition, the Texas boom, the rise of AI. It's a lot to keep track of.
It's like a game of 3D chess, where every move has these ripple effects across the board.
You got it. And that's what makes analyzing this deal so fascinating. It's not just two companies merging. It's about understanding the forces that are shaping the future of energy.
So, big picture stuff. Love it. But let's zoom in a bit. You mentioned Constellation's taking on Calpine's debt. That's a bold move. Got to be some serious confidence there. What about investors, though? How are they reacting to all this?
Well, so far, it's thumbs up all around. Constellation stock jumped over 20% after the announcement.
Wow, 20%. That's huge.
It is, especially considering that debt they're taking on shows investors are buying into this long-term vision, betting on their ability to navigate the energy transition, capitalize on growth, all that good stuff.
So Wall Street's giving it the green light. But what about the regulators? A deal this big is bound to raise some eyebrows, right?
Oh, absolutely. We're talking Federal Energy Regulatory Commission, FERC for short, state-level bodies too, Public Utility Commission of Texas, for example, and then there's the whole antitrust issue, market share, competition, all that.
So it's not a done deal just yet, but plenty of hurdles to clear.
Oh, yeah. Some analysts are predicting a long and bumpy road to approval.
Protracted, is that the word they're using?
That's the one. Possible forced divestitures, too. So it's not just about strategy, it's about execution. Can they actually get this thing across the finish line?
A real nail-biter. High stakes, uncertain outcome. It's like we're watching a high-stakes poker game unfold in real time.
That's a great analogy, and that's what makes it so exciting to follow. But hey, I think it's time to shift gears a bit. Our listeners are probably itching for their favorite segment.
Oh, you know it. Time for This Is Not Financial Advice, where we put on our speculative hats and explore some shall we say, creative trading ideas inspired by this news.
Always a fun one. But first, the usual disclaimer. Folks, we're just having fun here, exploring possibilities. This is not financial advice. Do your own research, talk to your advisors, all that jazz.
Absolutely. Safety first. So with that out of the way, let's get those creative juices flowing. What kind of crazy, outlandish, but plausible trade idea can we cook up based on this Constellation Calpine merger?
Okay, let's see. Well, this deal, it's a big bet on natural gas, right? Especially when you factor in that carbon capture technology.
Carbon capture, that's the key, isn't it?
Could be. So, here's a thought. Go long on a basket of natural gas producers, specifically ones that are investing heavily in carbon capture projects.
So we're riding the wave of Constellation's bet, but spreading it across multiple companies. Diversification, I like it. But how do we make it even more, well, audacious?
Let's add a call option play on Constellation itself. Expiry date. Let's time it to coincide with the lockup period of Calpine's major shareholders, usually around 18 months.
Oh, I like where you're going with this. We're betting on the deal going through smooth, no regulatory snags, and Constellation's stock price keeps climbing as they integrate Calpine and realize those synergies.
You got it. If everything plays out perfectly, both sides of this trade could see some serious upside. Natural gas producers, and the Constellation call options.
Sounds like a high-risk, high-reward scenario, but got to be realistic. What could go wrong with this wild idea?
Plenty. The deal could hit a snag, regulatory delays, maybe even outright rejection.
In carbon capture, it's still a relatively new technology. What if it doesn't live up to the hype?
Major risk factor for sure. If that tech falls flat, our whole natural gas play goes out the window.
Okay, so regulatory risk, technological risk. Anything else we should be warning our listeners about before they go betting the farm on this hypothetical trade?
Always going to watch out for the unexpected. What if some new energy source comes out of nowhere and disrupts the whole market?
The dreaded black swan event.
Exactly. Impossible to predict. So, to recap, our outlandish trade is going long on natural gas producers with those carbon capture projects, A&D buying call options on Constellation, betting on a smooth deal, rising stock price, the whole 9 yards.
But folks, this is purely hypothetical. Imaginary portfolios only. Don't come crying to us if your real-life investments go south.
Exactly. Just a thought experiment, a way to explore the possibilities. Always do your own research, talk to the pros, and never bet more than you can afford to lose.
Couldn't have said it better myself. Well, now that we've gotten our speculative fix out of the way, on to the next part of our deep dive. We've covered the announcement, market reactions, regulatory stuff, even our fun little trading thought experiment. But there's still so much more to unpack here.
Oh yeah, we've barely scratched the surface. We got to delve deeper into the implications of this merger for renewables, the fight against climate change, the whole future of the U.S. power grid.
It's a big topic, and we're going to tackle it head-on in part 2 of our deep dive into this blockbuster energy deal. So stay tuned, folks, because the conversation's just getting started.
It certainly is. Welcome back to Talk Tickers. Before the break, we were just talking about all those regulatory hurdles facing this Constellation Calpine merger.
Yeah, some serious obstacles for sure. But, it makes you think, what really pushed these two companies to make such a bold move, knowing they'd be under the microscope like this?
It's a good question, right? I mean, it's not every day you see two major players like this deciding to, well, basically become one.
It's like they're going all in, no hesitation.
Exactly. So what's the driving force, besides, of course, all the stuff we've talked about already, Texas, AI, all that?
Right. Beyond the obvious.
Well, we got to look at the history of these companies. Constellation, for example, they spun off from Exelon just a few years back, and ever since, it's been like acquisition spree central.
So growth is the name of the game.
Seems that way. Ambitious plans, not afraid to shake things up. And then there's Calpine. They were taken private back in 2018 by Energy Capital Partners, and they've spent the last few years basically streamlining, getting ready for a potential comeback to the public market.
So this merger, maybe it's not as out of the blue as it seems. Both companies were kind of on a path that was, well, maybe leading to this all along.
It's like watching two rivers converge,
Yeah.
creating this powerful stream. Individually, they're strong, but together, they become a force to be reckoned with.
I like that analogy. Captures the sense of, I don't know, inevitability around this whole thing.
And the market's reaction. Constellation stock up over 20%, that says something, right?
Yeah, but 20% with all that debt they're taking on, that's a big gamble.
Definitely shows confidence, though. Investors are looking beyond the short term, focusing on that long-term growth potential, betting on their ability to manage that debt effectively, generate cash flow.
It's like they're saying, we're not afraid of a little debt as long as it means we're a major player in the future of energy.
Exactly, and that future. It's electric. Electric vehicles, smart homes, all those devices, the Internet of Things, it's all going to need massive amounts of power.
And the data centers, like we talked about, AI, big data, it's all just going to keep growing, sucking up more and more electricity.
This merger, it's about positioning themselves at the forefront of all that. It's not just about combining assets. It's about being ready for this electric revolution.
But let's not forget, the human side of things. Thousands of employees, customers, communities, they're all going to be impacted by this.
Absolutely. A smooth transition is crucial. Got to address any concerns that come up from employees, customers, the communities where they operate. It's not just about numbers and stock prices, right? Real people are affected by these decisions.
Exactly. It's easy to get caught up in the financials, the market speculation. But at the end of the day, it's people's lives we're talking about.
Couldn't agree more. This whole thing, it raises some really big questions about the energy transition, too. It's not as simple as just saying, okay, we're switching to renewables, done.
No, it's way more complicated than that.
This deal, it kind of suggests natural gas is going to play a big role in that transition, especially with that carbon capture technology they keep talking about.
The tech's promising, but it's still early days.
Right.
Are we putting too much faith in something that hasn't really been proven at scale?
It's a valid concern, for sure. If carbon capture doesn't pan out, it could have ripple effects throughout the whole industry.
It's a gamble, no doubt. But it feels like the whole energy sector's holding its breath, hoping it works. Because if it does, it could be a game changer. If it doesn't, well, that's a whole other conversation.
And let's not forget, things are always changing in the energy world. Renewables, they've been advancing so fast, no reason to think that's going to stop.
True. There might be solutions out there we haven't even imagined yet. It's an exciting time to be watching this space, even with all the unknowns.
Absolutely. This merger, it's just one piece of a much larger puzzle, and we're all just waiting to see how it all comes together in the end.
Okay, so enough serious talk for now. Time to inject a little bit of that, this is not financial advice, fun into the mix.
Always a good time for some speculation, right?
Yeah.
But first, the disclaimer. Just for fun, folks, purely hypothetical, not financial advice. Always do your own research.
Right, just two guys, a microphone, and a fascination with the markets.
That's us. So with that out of the way, let's cook up another one of those outrageous but plausible trade ideas. What you thinking?
Let's see. We've talked about natural gas, renewables. But what about something a little more, I don't know, unexpected?
Okay, I like where you're going with this. Think about it. Constellation, they're the biggest nuclear power plant operator in the U.S., right? This merger. It basically makes them the dominant force in that whole sector.
Nuclear. Interesting. It's been kind of out of favor lately, but with all this talk of clean energy, reliable baseload power, maybe it's due for a comeback.
Maybe. And don't forget the geopolitical angle. Uranium, the fuel for those nuclear reactors, it's a finite resource. Tensions are rising in some key uranium-producing countries. Could disrupt the supply chain, lead to a price spike.
So our crazy trade idea is to go long on uranium. Buy shares in mining companies, maybe even dabble in uranium futures.
Now you're talking. But of course, there's always risk. What if this nuclear renaissance never happens? What if they find new uranium deposits flood the market? Governments could crack down on nuclear power too. Safety concerns, proliferation, who knows?
Always something, right? That's what keeps things interesting. But that's the nature of the market, isn't it? Always a balancing act between risk and potential reward.
Exactly. And folks, this is all just hypothetical. We're not endorsing this trade or any other. Do your research, talk to the pros, and never bet more than you can afford to lose.
Words to live by. But hey, it's fun to think about the possibilities, isn't it? That's what we're all about here at Talk Tickers, exploring those connections, the ripple effects, the what-ifs that most people miss.
We're trying to make sense of it all, give our listeners something to think about beyond just the headlines.
All right, well, on that note, time to reflect on everything we've discussed so far. We've covered a lot. The announcement, market reaction, those regulatory hurdles, the impact on renewables, climate change, even the uranium market.
It's been a whirlwind, but I think our listeners are getting a good sense of how complex and how important this merger really is.
Absolutely. But there's one key aspect of this deal we haven't really touched on yet. Renewables.
Yeah, the big question. Is this merger a win for clean energy or a setback?
The million-dollar question. And it's one we're going to tackle head-on when we come back for the final part of our deep dive into the Constellation Calpine mega merger.
And we're back. Talk tickers, still diving deep into this Constellation Energy Calpine merger.
That's right. Lots to unpack here.
We've talked strategy, market moves, regulatory roadblocks, but now the big question. What about renewables? What does this deal mean for clean energy?
Yeah, that's the elephant in the room, isn't it?
Mhm.
Some folks are saying this is a step backwards for the clean energy transition.
I can see why they'd say that. Calpine, they're big on natural gas, fossil fuel, plain and simple. Even with their investments in carbon capture, there's still that concern. Are they really committed to a sustainable future?
It's a valid concern. But here's a thought. This merger could actually speed up renewable adoption. In a roundabout way, of course.
Okay, now you've got me intrigued. Roundabout how?
Think about it. The combined company, they're going to have huge cash flow, diverse portfolio, economies of scale, all that. That gives them the financial power to make big investments. And where could they invest? Renewables. They could use the profits from their natural gas, their nuclear plants, to fund a massive expansion of their wind and solar portfolio.
Exactly. It's like, using the money you make from your gas guzzler to buy a Tesla. You're leveraging the old to transition to the new.
It's not as simple as some people make it out to be then. It's not just fossil fuels bad, renewables good. There's nuance here.
Lots of nuance. And don't forget the regulators. The government wants clean energy, right? Constellation. They're going to be under pressure to show they're serious about that. Investing in renewables, that's a smart move. Keeps the regulators happy, positions them as a leader in the clean energy space.
So they're playing a balancing act, meeting today's energy needs while investing in the solutions of tomorrow.
A delicate dance, for sure, but one they got to master if they want to be successful in the long run.
No doubt. Now, this deal, it's also sparked some concern among climate activists. They're worried it'll just keep us hooked on fossil fuels, make it harder to cut emissions.
I get that concern, absolutely. Climate change, it's a huge issue. But we also got to be realistic about the energy transition. Flipping a switch overnight, not going to happen. We need a bridge.
And that bridge, for now at least, is natural gas.
Exactly. We need it to keep the lights on, keep things running while we build out those renewable sources. The key is to use it responsibly. A&D keep pushing for those clean energy advancements.
So Constellation's got a lot to juggle here. Investors, regulators, environmental concerns, a constantly changing energy market. It's a lot.
Huge challenge, but also a huge opportunity. They could really set the standard for the whole industry. Their decisions, they're going to have ripple effects.
This is a story we'll be following closely for sure. But before we wrap up, we got to give our listeners what they came for.
Oh, you know it. Time for This Is Not Financial Advice.
Our favorite segment. But first, the usual disclaimer.
Yeah.
This is all hypothetical, just for fun, definitely not financial advice.
We're just exploring possibilities here. Don't go making any rash investment decisions based on what we say. Always do your own research.
Okay, disclaimers out of the way. Let's get those creative juices flowing. What kind of wild, totally out there trade idea are we dreaming up today?
All right, let's see. We've talked a lot about natural gas, renewables. But there's another energy source that people are sleeping on. One that this merger could actually bring back into the spotlight.
Okay, I'm all ears. Lay it on me.
Nuclear. Think about it. Constellation. They're the nuclear power plant experts. This merger cements their position as the dominant force in the U.S. nuclear sector.
Nuclear. Been kind of a dirty word for a while, but clean energy, reliable baseload power. Maybe it's time for a nuclear comeback.
Maybe. And don't forget about uranium, the fuel for those nuclear reactors. Finite resource. Tensions are rising in some of those key uranium-producing countries. Disruptions, price spikes, it's all possible.
So our crazy trade, we go long on uranium, buy shares in mining companies, maybe even get into those futures contracts.
Now you're getting it. But of course, gotta be realistic. What if this nuclear renaissance never happens? New uranium deposits could flood the market, prices could tank, governments could clamp down on nuclear power too. Safety worries, proliferation, who knows?
Always risks. That's the market for you.
Exactly. Gotta weigh those risks against the potential rewards. But hey, this is all just hypothetical fun, right? We're not saying go buy uranium. Do your research, folks. Make informed decisions based on your own situation, your own risk tolerance.
Couldn't have said it better myself. But it's fun to speculate, isn't it? That's what we do here at Talk Tickers. We connect the dots, explore the what ifs, the things most people miss.
Trying to make sense of it all, give our listeners something to think about, Go beyond the headlines.
Well, on that note, I think it's time to wrap up this deep dive into the Constellation Calpine merger. It's been quite a ride.
We've covered a lot of ground, from the adjustment to the market reaction, the regulatory hurdles, the impact on renewables, climate change, even the uranium market.
Big thanks to all our listeners for joining us. Hope you enjoyed the show, learned a thing or two.
And be sure to tune in next time for more earnings call breakdowns, market analysis, and of course, this is not financial advice.
Until then, stay curious, stay informed, and happy investing, everyone.